Hey, what's going on, guys? Hope you guys are all good. Welcome back to another video. Really excited about this one. Today I will be doing a trade recap on the pair Euro USD from today. It was really good. Just going to break it down from a top-down perspective so you see how I approached it, why I took this trade, how I took this trade, my specific confirmation entry, which is this here, which I will break down. So yeah, really excited. Let's get into it. So let's start on the daily time frame. And what do we see? Again, we had the initial imbalance filled, started pushing up. Beautiful rejection from the non-farm payrolls news event. Yep, so pretty cool. Drop down to the 4 hour, and this is where we get busy. So what do we see? The imbalance was just about touched from the non-farm payrolls event, but I see this as a liquidity grab. So once we grab liquidity, what do we have? We had another break of structure or a change of character, or however you would like to see this. For me, this is a change of character. And when price did this, it created an imbalance over here. So once price created this imbalance, I was looking for inducement to be formed, which we have over here. And again, price tapped into this imbalance beautifully, or fair value gap, however you want to call it, and just reacted beautifully. So if we drop down to the 15-minute time frame and see where we are, and here we go. So we had the change of character like so, and we had our fair value gap with inducement produced. So price took out the inducement, and normally I would like to confirm this zone here. However, I was unfortunately not at my PC at the time, but nothing we can do about that, but move on. So on to the next. So what happened? We saw price react beautifully, came down, failed to make a new high, mitigated the order block, and started going to the downside. So if we jump to the 5-minute, which was my scouting time frame, what do we see here? We see this here, which is what I like to call a redistribution pattern or redistribution model, which is a form of Wyckoff. It's one of my favorite entry models. It's kind of my only confirmation model, which is Wyckoff. The redistribution and reaccumulation models are one of my favorites. They're just so consistent. So what do you see? It might look messy, it might just look like a range of market to you, but what I see here is a liquidation, yet another liquidation, and then finally the last move before the overall move, where the big boys got in, which is where we like to be. So if we drop down, this might make it a little bit more clear for you. Here we go. So this is the redistribution model over here. It's a very clean setup, really. So what you want to see for Wyckoff is you want to see price basically form into your zone like so. Start taking out highs, start taking out lows, and again start taking out highs again. So if I draw this out for you, as it did with price, like so, liquidate, high, test, high, and here we go. This is your Wyckoff schematic, like so. It is a masterpiece, and for those who are not familiar with Wyckoff, it was created over 100 years ago by a geezer named Richard Wyckoff. He is a legend. Love that guy. So yeah, I suggest you do your research onto it, because it's an amazing strategy. So what do we have here? We have a liquidation of a low, and then once you have the liquidation of the high, you can establish the low as a sign of weakness. So the only labels I put onto Wyckoff is the sign of weakness, like so, and then that's basically it. For me, I don't need any of the other labels, because this is simplified Wyckoff. You can go ahead and place all the other labels: automatic rally, secondary test, sign of weakness, forgive me, UT, and finally you have the UTAD. Cool. So forget all the labels, they're really not necessary. For Wyckoff to be simplified, all you want to see is a liquidation of a low formulated by a liquidation of a high, and then finally you want to see another liquidation, and then the price will go. So it's the law of supply and demand. So it's basically direction in price is formulated if demand is greater than supply, basically price will go up. If supply is greater than demand, price will basically fall. But for the big boys, they need liquidity. So if we jump to the 5 minute, like so, you can see here we have a fair value gap, which we all know is resting orders that haven't been filled. And if we go back to the 1 minute, you can see that it probably just missed it, right? So this could have been looked at as inducement, so this is why I want to see this high taken out again. So once this was tapped, beautiful, this is where we head into our entry. So if I mark this out as it was, we have a liquidation of a low, which is the liquidation of the secondary test. Label this as a liquidation event, and then we have the final liquidation of the high, like so. And let's just get rid of this box for now. So like that, this is Wyckoff. It's super simple. Liquidation of a low, liquidation of a high, wick rejection. You could use the 3 minute. I think I used the 3 minute. And once you see a rejection like this, followed by another rejection, you just mark it into it, which I did here. And then the target of the trade was the previous low, or a pivot point, like so. And that is Wyckoff, or a simplistic version of how I trade. It's really easy, super straightforward. Redistribution model, reaccumulation model, which is Wyckoff, and the same occurs right over here. Wyckoff is fractal; it's everywhere. Even on the seconds, it's most likely over here. It's most likely over here. Well, I can see it's over here. Liquidation, liquidation, and off we go. So, yeah, cheers for watching my video. I hope you found this helpful. I will try a little bit better with my breakdowns, but overall, I hope I got my point across. Any questions, leave a comment. If not, like the video. Don't forget to subscribe. And yeah, cheers, peace out.